The markets are at a crossroads as both the Federal Reserve and the Bank of Canada signal that the era of easy money may be slipping away. Precious metal prices are holding firm and tech sector valuations appear increasingly vulnerable. Well, I want to get some insight now from Chris Vermeulen from the Technical Traders. Chris, it's a pleasure. Once again, thanks for talking to us.
Hey, thanks for having me. Always a pleasure. Yeah.
So we're talking off camera. I mean, you've warned that the tech and AI stocks have been holding up the major indices, right? While the broader market weakens. Well, I'm curious, what are you seeing in the charts that tells you this leadership is now a risk rather than a strength?
Well, I mean, if you look at, say, over the last couple of weeks, if you look at the different indices, if you look at the Russell 2000 and the Dow Jones and the microcap index, they are all in a very strong downtrend. They've sold off. They've had a very little bounce. Versus if you look at the S&P 500 and the NASDAQ, which is definitely tech heavy, they're holding up fairly well. And of course, we have Nvidia coming out, just came out with earnings. And of course, that's creating a feeding frenzy, and it's sending a lot of people just into pretty much all stocks because they're getting excited again. Obviously, big news like that gets even emotional traders. Everyone just has FOMO and they just feel like they have to get in. It's really good news. So, you know, it's not a super strong bounce. Today's bounce, you and I are speaking, this is November 20th. So Nvidia just came out with earnings last night. We got a big bounce up. But the question is, like, is this a bounce or the start of a rally? And at this point, we still need to look at it from my perspective as a technical trader. This is a strong bounce in a downtrend, and bounces within a downtrend are usually very strong. And really, the S&P 500 and the NASDAQ are bouncing right into a resistance area. And it's a news-driven move by one stock really just kind of sparking a movement. So I want to see if there's follow through, if the markets can hold up, or if this is just going to fizzle out over 1 to 2 days from now.
If we do enter a more pronounced market downturn, right, Chris? I mean, where do you believe capital will rotate first? I mean, defensive metals, cash, or elsewhere?
Yeah, we have been seeing money when it gets nervous. We've seen defensive money move into the utilities sector, like XLU, like an ETF is a good way to gauge it. But we've also seen it's been moving into gold, and gold more so for the last couple of years. It's clear that there's something wrong in the world and the economy, that people are migrating to gold and silver. It's been rallying dramatically alongside with stocks. That's never a good sign. And so I think you've nailed it. I think when the stock market does eventually have some big correction, we're going to see money coming out of stocks, and that money's always looking for a return on investment. So it's going to say, okay, well, what's working? And it'll be precious metals most likely. And so all that money coming out of stocks is going to dump right into the precious metals space. And we're going to probably see a very big move. In fact, the charts are pointing to about $5,200 an ounce for gold, potentially $82 an ounce for silver. So we're looking at some very big moves, which actually mirror what happened in 2007, early 2008, as equities started to sell off. That money came out of stocks and piled into the precious metals space. And miners do very well also. So it's exciting. We just need to see how this goes. And today's news with Nvidia is just shaking things up. It always stirs the pot. It gets the emotional traders piling in, but it doesn't mean it's the start of a new trend. It's just a news-driven move today.
Yeah, it's compelling to watch. And if you want to use some charts to show me, to go ahead. But let me ask you this: gold remains above $4,000, right, and silver above 50 US dollars. That's despite dollar strength. Does this current consolidation, Chris, signal vulnerability or the setup for another breakout? What do you think?
Well, yeah, I think the precious metal space about a month or so ago was a little frothy. Anybody who was open to getting into precious metals, they were piling in. If they weren't in, they were buying it right near the recent peaks. And it was so predominant and such a FOMO-driven move that people just felt like they had to get in. The market needed to have a bit of a correction. And that's when gold turned around in one day and had the biggest one-day sell-off in 3 decades. So this pullback, as you just mentioned, Devan, I think it's a consolidation. I think I think we want to see this. This is a pause. We actually saw a pause just like this in 2007. The stock market started to show signs of weakness. Gold paused for about a month and a half, and then gold shot up 30%. Silver rallied 60%. So this is good. We don't want really price of metals to go straight up. We do want pauses along the way. That makes it sustainable. I do think metals are still somewhat in a parabolic move. If you look at the monthly chart and zoom back on silver, every time we have these big vertical spikes, they usually end pretty gnarly, a big dramatic red bar or multiple red bars after. But I don't think we're there yet. I think we're still going to see another big push to the upside before I think we start to see a bit of a correction or a sharp correction in the metal space.
Yeah, it's interesting because you've got to look at the short term and then the picture's somewhat different in terms of texture long term, right? For Canadian listed miners, how does the mix of a firmer loonie, softer inflation and global uncertainty shape your short term outlook?
Yeah, I mean, this is one thing I think a lot of people get confused because I'm always juggling between long-term views and short-term analysis. And people sometimes will be like, well, you said you're bearish and, I'm bullish on a long-term, but short-term. So when it comes to like Canadian investors, which I am as well, I think depending on how active you want to be, you kind of also have to focus on currencies. I think being long U.S. equities, like U.S. Mining stocks, on the U.S. exchanges, you want to hold your currency, I think, in the U.S. dollar. I do think when we go through some financial crisis of some sort, the equities market sells off, we tend to see the U.S. dollar index and the U.S. dollar itself rally very strongly. And so if you're even just holding cash in U.S. dollars can become a very lucrative position. So as a Canadian investor, I favor U.S. equities, buy the mining stocks, for example, on the U.S. market so that you're holding it in U.S. dollars. So you're kind of getting two plays in one, right? So that's kind of the view. Eventually, if we have a financial reset, say 6, 8, 12 months from now, and the markets sell off, the dollar will eventually peak. And I think investors will be very wise to move their funds back into Canadian dollar because the dollar will crash and the Canadian dollar, I think, will rise from the ashes. So there's a nice way to play that. But these are big long-term cycles. And right now, I think that it favors Canadians owning U.S. dollar.
Yeah. And just finally, as I wrap up, Chris, I mean, I get the context of your overall view here on what's happening, especially with how the market trends are unfolding. But, what signal, upcoming data point or market event, if you like, are you watching most closely that could either validate or challenge your current thesis? What's the important thing that you're watching out for?
Yeah, I think, I don't think there's just one piece of data that really is going to change it. It's usually a conglomerate of multiple things that give a scale, a weighting of like, okay, the tides have shifted from being bullish metals to bearish metals and all those things. I think in a perfect world, if the stock market starts to sell off and gold and silver start to rally dramatically, I will think there's probably only a few weeks to maximum a couple months before gold tops out and it goes into a big correction. And I also think that'll also be the signal saying, okay, well, the stock market will probably have fallen 10 or 20% from here. I'd be like, I would expect some small bounce in the stock market, but after that bounce, I think we'll be starting a full-on bear market. So when we see that big decouple where stocks sell off and precious metals shoot through the roof for this last big rally, that is going to be a huge warning sign for precious metal traders to get their stuff together to figure out what to do, because you could give back a lot of the gains. And also, if you hold equities, you better have a game plan ready, because if we do go into a financial reset, it only takes one to hit you, and it can set you back 10, 15 years. So you got to be very cautious. So that's what I'm waiting to see if that takes place.
Always insightful, always invaluable. Chris Vermeulen from the Technical Traders. Thanks very much indeed for your time.
Thanks for having me. Always a pleasure.